What's going on, traders? Gareth here, and welcome back to this week's market outlook. There's a lot of markets to digest heading into this week, from ongoing geopolitical tensions, like we've been discussing in previous weeks, central bank expectations, inflation concerns, key economic data that could bring volatility across gold, indices, forex, and crypto. Starting with the macro picture, markets remain focused on interest rates and the expectations of that. There's still growing speculations around when central banks may begin easing later this year, but officials continue stressing that they want to see inflation sustainably under control before moving too quickly. That means that every major inflation print, employment number, and growth release remains a potential catalyst for markets. This week, traders will be watching whether data supports the soft landing narrative or whether stronger data pushes rate cut expectations further out. That has a major implication for the dollar yields and broader risk sentiment. Now, from a geopolitical standpoint, tensions in the Middle East and broader global uncertainty continue to support the safe haven flows. Any escalations around supply routes and energy disruptions or military developments could quickly move oil and gold while impacting broader market sentiment. And with geopolitics feeding into inflation risk through energy prices, that remains something traders cannot ignore. Looking at the dollar and yields, and these continue to be some of the biggest drivers in the market. If yields remain elevated or push higher on stronger data, that could keep pressure on risk assets while supporting the dollar. So, if data softens and markets lean back into rate cut expectations, we could see a dollar weakness and support the flow back into commodities and risk assets. Now let's talk gold. So gold continues to hold a bullish longer-term structure supported by central bank buying, geopolitical uncertainty, and shifting expectations around monetary policy. If the dollar softens and yields ease, gold could continue pressing higher, but if the yields spike higher, we could see a short-term pullback of profit taking. So for gold traders, watching real yields and risk sentiment remains key. On the indices side, equity market remains very sensitive to earnings, rate expectations, and growth data. If data comes in supportive and recession, fear stays muted, we may see, people continuing to buy the dip. But any hawkish surprises or weak economic numbers could trigger sharp volatility. So expect the S&P and Nasdaq and Dow to remain reactive to both macro data and sensitive sentiment shifts this week. So moving over to crypto, Bitcoin and broader digital assets remain highly responsive to liquidity expectations and overall risk appetite. When markets lean risk on, crypto often benefits. So when uncertainty arises, then the dollar strengthens, volatility can pick up. So crypto traders should keep an eye on technical structure and another on macro. Turning to the economic calendar this week, we can see there's quite a few data releases. We'll be looking into that shortly. But we know that this week is going to be a good one. We've seen a lot of volatility, especially on gold. There's been a lot of random spikes. And obviously, as we know, it's not random. It is due to what is going on in the world. So let's take a look into what's moving the markets this week in terms of red folders, and then we'll go through the charts. So we're going to look now at what news we have this week. This week, I would say that there's one day that really not worries me, but the one day that I'm going to be looking out for is not Monday. Monday we've got a pretty clear day. On Tuesday, we do have some news for the Japanese yen. So if you do trade, let's say GBP, JPY, just watch out for that. But Wednesday, we've got quite a heavy day with the FOMC statement coming out. Now, in past, we do know that the FOMC moves aggressively. Often, it is a very volatile event. So that is one that I will be watching, potentially look for some positions, and I will possibly be going live on our YouTube for that. But yeah, I would say that this is something that we should definitely be watching out for. For the swing traders, make sure that your positions are if you have enough room, then it's fine, but make sure that you have enough room in your trade. If you are in profits, secure some profits or potentially move your stop loss to break even for these types of positions. But yeah, we've got some CAD news and then also some big USD news coming out on that day. This week, that would be the only trade that I sort of see causing any not trouble, but that would be the only day that I'm really, really watching out for. Obviously, we do have some more red folder and GBP for the GBP, the Euro, and the USD, as well as CAD on Thursday. So there's going to be a lot of volatility, around those events across the day, which is pretty nice for those traders that don't just trade USD related pairs. Friday, pretty easy day on Friday, so it's nothing really to watch out for there. But I would say always just keep an eye out. Now, looking into the dollar, we can see that one thing that has happened with the dollar is that price is starting to respect this level. We have seen the rejection, and we are starting to create really nice structure to the upside. So what we are waiting to see this week is if price breaks this level here, we'll actually mark it out better. So I would say that this is the level I would be looking into. If price does break that level, then we know that it is breaking structure and we could potentially see price move below. Now, obviously, when you're trading the dollar, you cannot just look at the technical side of things. So we'll be watching what's happening with the war and all the other, things going on in the world, anything unexpected that can also happen. So obviously watching the economics, the geopolitical, everything that's happening, I'd be keeping an eye on that. But on the technical side, this is a level that I don't think should break. If it does hold, then we can potentially see a stronger dollar coming through. So that's what I'll be watching this week, with gold as well. If the dollar continues to strengthen, we know that gold could potentially start to drop. Now, we have been bearish for the last 2 weeks on gold, with a lot of movement coming in. But at the moment, we can see one thing that has happened is we are starting to respect some levels. So this week, I would say something important to look out for is to watch how gold reacts around these specific targeted levels. Because if we are going to be bullish, then we could potentially see price aggressively break through all these levels and sort of flip bullish quite quickly. So that's something to watch out for. Gold has been really nice. We've been catching quite a few sells in the last few days. We actually caught a sell on one of the lives, which was very nice as well. Indices continue to just push. We are still at all-time highs, which is really good. As you can see, the indices is at all-time highs, and there's no signs of it breaking just yet. So that's something that I would say in my opinion, I wouldn't be trading indices unless you catch some really good buy positions, because trying to sell is incredibly difficult because you're basically trying to, catch a falling knife. You don't know when it's going to sell, but traders do know that eventually there's going to be a steeper pullback, but for now, there's no signs of that happening. That being said, we've got GBP USD. Once again, if the dollar does continue to strengthen, then we could potentially see this flip bearish again. But right now the dollar is showing signs that we are not going to strengthen right now according to technical analysis, which we can see in this chart as well. As you can see, prices being quite bullish, and now it's showing signs of consolidation. So once we have a bit more direction on the dollar, we'll know what's going to happen with GBP USD, and the same thing with Euro USD. As you can see here. So Euro USD is looking a bit cleaner in terms of sells, which does indicate that the dollar could be weakening. We'll see how price reacts around this level though. So I would be watching how price reacts. But yeah, some really, really good setups I think coming in this week for Euro USD, gold, as well as watching the dollar. There's going to be some movement there. Something interesting that we also can look at is oil. Oil has been a very active mover in these past couple of months, as we know, because of what's happening with the oil, with the Strait of Hormuz, sort of closing out, and opening and closing. And yeah, I think everyone's feeling the oil prices, in terms of fuel and all that. So yeah, we're going to watch this week as we could potentially see oil start to push higher, especially if the Hormuz does not open up anytime soon. So for that, oil has been quite nice to look at. Then we can look at Bitcoin. So with Bitcoin, obviously for those Bitcoin crypto investors, we have seen a bit of momentum on Bitcoin side. It's showing signs of being bullish, but then again, we have now tapped into this area and it is seeming to reject it. So my eyes would be on Bitcoin. Obviously, we know that with Bitcoin, if Bitcoin moves, the altcoins follow. So something to watch out for this week. But that being said, trade smart, trade your plan, and I'll see you guys in the next one. Cheers.